Thank you for joining us today for our Economics of Coronavirus webinar series. Today will be our final session in this series. We may offer a similar session in the fall once we kind of have a little more data and can analyze some things. So we just wanted a couple just sort of opinion polls to present here. Just to kind of see what you think. One was, when do you expect life to return to close to normal? And of course, not super well defined there, but it looks like most people are saying somewhere between September and December. A few are saying before the end of August. And, about 37% are saying sometime after January of 2021. So time will tell in terms of whether our expectations are met or not. And the other poll we asked here was, do you think Montana will see an increase in coronavirus cases as more activities resume? And we've got 25% of folks saying yes, they think a significant increase in cases, and about 62% are saying a modest increase. So again, time will tell as we move forward here and see what happens in terms of that. So thank you for joining us and participating in that poll. Quick reminder here before we get started, our website, which is on the flyer that you probably used to get the link for today, we do have recordings of all of our past webinar series, minus the one webinar that we had a technical issue with the recording, and we will post a recording of today's session on that website as well. And then, before I introduce our first speaker, also just note the question and answer pod at the bottom of the screen. You can send questions in. They come only to the speakers. So it's pretty much anonymous when you send those in. And we'll just pause from time to time and see if we can catch up with any polls or questions that have come in there at the bottom of the screen. So with that, I'll introduce George Haynes. He's an extension economist and a professor in the Department of Agricultural Economics and Economics, and he presented early on when very little was known about a couple of these programs. So he's going to talk some more about small business stimulus and probably a lot more details than were available about 6 weeks ago or so when we had George on last. So with that, I'll turn it over to you, George.
Okay, Joel, Joel, thanks a lot. Appreciate having a chance to talk a little bit about the small business programs. The one thing I hope to get across in the next few minutes today is this PPP program, the Paycheck Protection Program, is really the crown jewel of small business stimulus. And hopefully I can convince you of that. And the best part is there's money available. There's still $120 billion as of this morning available in the program. So I'm trying to tell everybody, don't give up. There's still a chance, and this is a really great program, as hopefully I can convince you in the next few minutes here. We'll take a little look at a quick Montana business profile, then we'll talk a little bit about PPP and then the EIDL program, and then talk just a little bit about some Montana stimulus money that's out of that $1.2 billion that the state of Montana got, where there's also some stimulus money available there. So what about Montana and small business? Small business as well, they're under the PPP program, the small businesses and especially accommodations and food service businesses in Montana have kind of been at the focal point of that, I think. And in addition to what I talked about last time we visited about PPP, farms and ranches have also been added into that as well. So in the things that I'm spending most of my time thinking about really is accommodation, food service, retail, and then something to do with agriculture as well. The Opportunity Insight has some projections and some actual data out here about what the issues are, and really this kind of paints a really important picture for Montana as well as the U.S. The percentage change in small business revenue, we're down about nearly a little over 32% when we go back and look at early January. We're doing a little bit better than they are U.S.-wide, where U.S.-wide we're down about 40% over that period of time. If we look at it in terms of, we look at it in terms of the change in hours worked in small businesses, we're actually doing substantially better than we are nationwide, as we're down about a quarter right now, where if you look U.S. wide, we're down just a little less than 50%. So we, in many ways, doing pretty well. And you know, all these stimulus programs are really focused on really one issue, that being employment, and also to help a little bit with small business profitability. But employment is really the name of the game. So let's talk a little bit about these programs. And I've highlighted this before, but I think it's really important to understand that you know, small businesses have never been recipients of much grant funding. There's a little bit out there in the small business innovation research arena, but that's about it. And when you think about financial support around disasters, all they could get was really loan guarantees. And loan guarantees are the same things that you can get from the Farm Service Agency if you're in the agricultural business. But when you get down to the next tier on financial support here, you notice there's a whole laundry list of financial support programs if you're thinking about production agriculture here in the U.S. And these are all essentially grant programs. You know, you sign up for them, there's no premiums to pay or anything. Over on the small business side, though, it's really down to two things, and these are just, one of them is brand new, the Paycheck Protection Program. The emergency or the injury to disaster loan program is also important, but we'll talk about how much more important the Paycheck Protection Program is in relation to in relation to the EIDL program. So here's the details with the Paycheck Protection Program as of a few hours ago. There's essentially about nearly $660 billion allocated, and as I said before, about $120 billion left. The most important part to remember about this, all of this money is likely to be forgiven. It's all going to come in the form of grants. It's not necessarily true, but it's almost totally true. That's about how it will be allocated, as long as you play by the rules of the game, and we'll talk about those in just a minute. The economic injury disaster loan program is a little different story, though. There was originally about $17 billion in the original CARES Act, that $2.2 trillion bill. And then more recently, there's been about $60 billion added, but only $10 billion of it really matters. And we'll talk about why that matters. And the main reason is that with the EIDL loans, you're not going to have the loan forgiven, but you will have the advance to that loan, and they'll give you an advance up to $10,000. We'll talk about the rules of the game with that in just a minute. But it's only the advance that's going to be forgiven, which turned out to be relatively minor. And again, with this program, you can spend it about any way you want. There really are no particular restrictions. You can use it for nearly everything. So let's take a look at Paycheck Protection Program, or initially here, any small business can get their money out of this program. There's special provisions in this if you have to be in the hospitality and food industry. Shake Shack and some steakhouses and some other publicly traded companies got their fingers into some of this money. Most of them have decided they go ahead and pay it back, but it's primarily for small businesses. They needed to be in business by February 15th of this year to qualify for any of the money. And what it allows you to do is to get a loan guarantee, but this terminology doesn't tell you the full breadth of this, because this loan guarantee can be totally forgiven. You never have to pay any of this money back. More recently, as of a few days ago, they put a provision in there. You don't even have to verify that you were damaged by COVID-19 to get the money. Before, you had to, kind of check the box, but that was a very informal process even then. But so it's money, and it's essentially grant money. The loan guarantee, and we'll talk about it. An example in just a minute, is 2.5 times your monthly payroll. And as long as you're careful, and this little blurb at the bottom here is really important, because you have to pay, this money has to be used for payroll most importantly, and then you can also pay rent or mortgage interest or utilities out of that, and we'll talk about that in just a minute. Other terms of this, you don't have to put up any collateral, you don't have to sign any personal guarantees. They're not going to charge any fees, either from the federal government or from the local bank you're dealing with. It's completely backed. The banks don't really have any skin in the game, if you will. And the loan, if you want to take it as a loan, you can keep it out there for a couple of years, and you know, you pay a really low interest rate, only 1%. And probably the most important thing is there's no income tax liability for any of this. So you're essentially being able to pay your employees over about an 8-week period of time, and you getting all the money from the through this program without any income tax consequences. So let's do a really simple example here. We're only going to employ four employees here just to keep our life simple, but these 4 employees are going to earn about $150,000 in salary and another $50,000 in benefits. So you can add these two together, and that gives you $200,000 worth of payroll. You divide that by 12, and you have a monthly payroll then of about less than $17,000. So the way that you can calculate the amount of money you're going to get out of the program is just take that times 2.5. And so this particular business, they would be eligible for a loan, in this particular case of you know, a loan guarantee, more specifically, of about $42,000. And again, keep in mind that it's $42,000, but likely to be totally forgiven as long as you play by the rules of the game. Well, what are the rules of the game? Well, and with this $42,000 you're getting, about 75% of that has to be paid in the form of payroll. If you don't pay 75% of it in payroll, or at least that much, you might not be able to get any of it forgiven. Although my guess is it's going to be factored down by the amount you're below the 75%. In our particular example here, this guy actually is, these people are paying 80% of the loan will be for payroll, and then the remaining is going to be used for interest, rent, and utilities. So this particular strategy would work just fine. Now, one of the things I've been really curious about ever since this program was initiated, and I've actually done quite a bit of work in this arena, is to look at and see who the winners and losers are. And the way I profiling winners and losers here is based on previous lending from the Small Business Administration. Did you get more or less money, or lower, smaller, or bigger percentage of that money than you would expect? So you might look at this chart that's here, and you notice that there are some lines up here, especially the blue lines, that are much longer than the orange lines. At least that's the way it is on my screen here. Those are the businesses that are out there that have not done very well. They haven't got as much money as one would expect given previous SBA lending. And so that's accommodation and food services, retail trade, and then another category called other services really have been what I would call the losers, because they just haven't been able to generate as much out of this program as one would expect. The winners, on the other hand, are businesses that are typically more organized. You know, typically they're going to be incorporated for one reason or other. So they're able to get into these pools of money because they're really ready to go when these opportunities come up. And it seems to me the manufacturing, construction, professional businesses here, if you notice where the orange lines are longer than the blue lines, are the ones that have really benefited from this and getting a lot more money out of the program than one would expect, given previous experience with the SBA. If you look at this on a state-by-state basis, there's been some winners here too. You know, we've actually done pretty well in Montana. We're a blue state here, with the orange states are the ones that haven't done so well. But all the states in kind of the Midwest and, you know, in the West have done reasonably well, at least as far west as Montana and Wyoming, with the big winners being Nebraska, North Dakota, Kansas, South Dakota, and then one that's not on our list or our map here is Hawaii has really cashed in on this. If you look at the losers, the ones that haven't done so well, you know, Georgia has gotten about half the money you'd expect, has California about the same boat, and then Arizona, you know, being in that same list. So some states have done much better than others. As you can see, the far western part of the U.S. is probably not done as well as one would expect. So on the economic injury disaster loan program, I've highlighted the loan advance part of that because really that's all that matters. The rest of it doesn't really make much difference here. And so how does this work? Well, it's about the same people that can apply for the money. You have to be a small business, and farms and ranches were recently added into this pot of small business people, so they're eligible for the money as well. Formerly they weren't. And you have to have been in business on the 15th of February, same as with the PPP program. The This program's gone through lots of changes. As of a few days ago, you can only borrow, you can get a loan guarantee only of $150,000 in this thing, and the maximum amount of money you can get, which is actually held true for this most of this program, has been $10,000, and that's the part of it that is potentially forgiven. We'll talk about what that means here in just a second. So what are the terms of this, other terms? Well, there are personal guarantees. This is a lot more like going in and taking out a very normal sort of small business loan guarantee. You have to, pledge some collateral if you have any collateral to pledge. That's maybe not as important as you might think. And then they charge you fees. So the bank's going to charge, and the SBA will charge you fees as well. It's backed by the SBA, and then the loan maturity is, in fact, in some new material that's out today, it looks like that loan maturity has been increased a little bit as well. So, but originally it was only 3 years. I think now they're going to have loan provisions that are up to 30 years on that particular program. So let's just take a little example of this to show you why this program is not that big a deal, at least in my eyes, in relation to the PPP program. So we have the same 4 employees. But they are constrained here. They can borrow up to $150,000 under the program under a loan, and they have that much loan guarantee. But they can only get $4,000 of advance money, and the advance money is all that's going to be forgiven. They get $1,000 per employee, and that's it. So under this program, they're going to get $4,000. Under the PPP program, they get almost $42,000. So a lot of difference in the two programs. And importantly, as of May 7th, unless you're a farm or ranch, you can't even apply for the money because they're getting, essentially running out of money in that program. So if we look at the allocation of this, I don't know it by industry because it's not reported that way, but some states have cashed in on this. Wisconsin, Utah, Iowa have done pretty well. The big winners, Wisconsin, Utah, Iowa have been the losers. The big winners have been Louisiana, and then all the East Coast states seem to have done very well. And then Hawaii, again, really cashed in on this program, so they've done very well in both the PPP and the EIDL programs. So what are the concerns that are out there in the last couple of minutes that I have? I think they're worried a little bit about this money flowing to places that maybe are less adversely affected by the pandemic. Secondly, there seems to be a little less interest in this program by the larger banks. They accounted for a third of the pre-policy SBA loans, but only 3% of these new loans going out. Large publicly traded businesses have secured some of these loans, which I talked about before. We're now, getting close to running out of money, but as I said before, don't give up on this program. I think that, there is this $120 billion still out there, and I would guess that if that doesn't satisfy, there'll be more money that will be probably allocated, or at least there'll be an attempt to do that. And then lastly, they're just really concerned about the businesses that really need the money actually getting it, rather than people that are, more savvy about how they might compete for these dollars. There is another program that's out there, which I'll spend just a second on here, but I would encourage you to look at the Montana Business Stabilization Grant Program. You can get an award up to $10,000 under that program. The Montana Innovation Grant Program is another one. There's an award with that. You can get up to $25,000, although there's a lot less money in that particular line than there is in the stabilization program, which has about $50 million, where this one only has $5 million. And the last line on this is probably really important in some ways. If you need any help trying to figure out how to navigate your way through all this COVID stuff, there is a website out there called covidbizrelief.com, and I would encourage you to go out and take a look. These people give you free advice on how you can navigate your way around all of these different programs that have to do with coronavirus relief, and especially those attached to small businesses. So that's it. That's just a brief overview, and I just want to give you my pitch again that I think this is a crown jewel of stimulus programs for small businesses, and I really encourage you, if you know small business people, ask them if they've applied for this money. If they haven't, I really encourage them to do so. So thanks a lot, Joel.
All right, thanks, George. Again, if you have any questions, feel free to send those in right now. I'll start you off with one question. And George, do you expect there to be another stimulus package that might benefit small business owners?
Well, there's a substantial amount of talk out there right now that of additional stimulus, and whether that materializes or not, I don't know. I think there's a lot of opposition to this particular proposal that's out there, and I think there's a sense that maybe there's enough funding in the stream right now. But I think there is this notion that small businesses need to be protected, and it seems like there's been a lot of effort so far to make sure that that's occurring. And my guess is there's still some sentiment that remains that could be positive, and some additional resources being made available. But you know, keep in mind there's still 120 billion there sitting out there, so they're not really at that point quite yet.
All right. Well, thank you very much, George. We'll continue to move along with our program here today. Oh, and there's a better picture than I have on my question slide a little later. Our next speaker also will be familiar to you, Kate Benson-Fuller, also an extension specialist and a professor in the Department of Agricultural Economics and Economics, and she's going to give us an update on the agriculture in Montana and kind of how that's related to COVID. She also gave us a bit of an update, I believe 5 weeks ago today, on a similar topic, so I think we know a little more now. So with that, I will turn it over to Kate.
Yeah, thanks. So I'm going to give an update on what I did talk about last month, and then also take a few minutes to talk about, or to answer some questions I got on particular industries during that talk. So first things first, we're going to jump back a bit and look at this in a global context. So this is important for a number of reasons. But also because here in Montana, our ag trade situation is a very global one. So we want to know what's going on with COVID and our trading partners. So you can see the U.S. is the big hotspot in terms of COVID cases here. This is from NPR back on Tuesday. And then in comparing with last month, so I put the same chart up last month, we've seen some big proportional increases in the number of cases in Mexico, which is a big trading partner with us. Russia, which is also more of a export competitor, particularly on the grain markets with us, and then some other countries in Europe. But in general, we've seen this is showing up in pretty much every country in the world now. On the national side, we here in Montana are looking really relatively pretty good. So on the East Coast is where the bulk of the cases lie, with some hot spots in California and places generally with larger metropolitan centers. This shows up a lot also if we look at the county context. So this is from usafacts.org, which is a government website. I forgot to put that on here. But you can see that particularly in eastern Montana, things are really looking relatively good compared to the rest of the country. And I think as we move forward with some of these relaxing of the stay-at-home orders, I think we saw a lot of kind of concern about how things will progress in that poll that we had up at the beginning of the of this webinar. So we'll see what happens moving forward. But right now, I think Montana is a pretty good place to be, all things considered. So this is an update from last month in talking about sort of the general sentiment of the agricultural economy. This is something that if you've been on here before, you've certainly seen me talk about. This is the Ag Economy Barometer, and it is generally a sentiment index of what's going on in the agricultural economy. 100 is sort of the baseline. Last month, we saw things really plummet down to 121. I said I still thought that was high, and we did see a reduction in this last month, so right now we're at 96. it's still, like, there still are lower points on this graph, so I think that we probably have some falling left to do. But again, we'll see moving forward. So a lot of what's sort of encapsulated in that sentiment is sort of the wild ride that we've seen a lot of these markets take. So this is something that Farm Bureau put together. And what they're doing is comparing futures prices. I believe most of them are for a fall contract, but it depends a little bit on the commodity. With what we saw in January. Now, in January, for a lot of these commodities, we already weren't in a great situation. So to see things fall off further is concerning. You can also see that there is a heap of volatility here. So these markets are moving all over the place on a day-to-day basis. Here in Montana, we are probably mainly focused on wheat and cattle, and I'll talk a little bit more about those markets in a minute here. Wheat hasn't been as much affected as a lot of the other commodities on this graph, particularly things like class 3 and 4 milk. We've really seen those fall off a ton and haven't seen much recovery yet, despite some programs that are designed just to help that industry. For cattle, things look worse. They look a little bit better than when we visited this last month. So live cattle are currently down about 17%. Feeders, which we're more interested in here in Montana because we have more cow-calf operations, those are down about 12% for a September contract as of just the other day. So generally markets down and a lot of volatility. So let's talk for a minute about some of these key Montana markets. So first, wheat. And we just had some reports come out that are pertinent to wheat and grains. So the first of which is the WASDE report. If you're not familiar with that report, it's a really good place to take stock of U.S. and global markets for major commodities. So the World Agricultural Supply and Demand Estimates, and they are predicting that U.S. production and stocks will decline in the coming year. But unfortunately for prices, they're also predicting that global production and stocks will be up. The good news is that they're also predicting that global consumption is up. So those things may balance each other out a little bit. They are predicting the 2021 marketing year projected price to be about $4.60. And that's sort of near what we're seeing on the futures market right now. So this is for hard red winter wheat, and when I checked it the other day, it was at $4.72. The other thing that that I just looked at that just came out recently is the latest crop progress report, and that is looking pretty good. So here in Montana, we are at 65% good to excellent rating. That's a little bit higher than what we see for the nationwide average typically at this time. And for the national average, it's about the same. So about 67% was rated good to excellent at this point. And that's for winter wheat specifically. On the cattle side, things are a real challenge. So a number of different things are going on here. If we look at that same WASDE report, they are really putting the emphasis on what's going to happen in 2021. So 2020, there's not a whole lot of talk about. And basically what they're saying is that production will shift into the following year. Of course, what that means isn't necessarily so simple. You can't just shift cattle forward into the following year. We're already seeing animals that are too big to be processed through our current situations at slaughterhouses and packing plants, and we're having a lot of discussions about animal euthanization. So some really hard conversations there. And as those animals get heavier and slaughter slows down, I don't think we're going to see these issues really letting up anytime soon. They did put forward a steer price estimate for 2020 of $104 a hundredweight. That is down. If you look at the futures price for feeder cattle for around a September contract, that is about 130. So these are low numbers. They are generally below what we think of as break-even prices for cattle producers. And so we have seen some concern that some ranches, even here in Montana, will have to shutter. There's this article in the Chronicle from just a couple days ago talking about the low prices and the impact on the industry. At the same time, if you go to the grocery store, it's not like the price of beef has gone down. In fact, you might have seen it go up, and you also may have seen shelves that don't have beef on them. So there's been a lot of concern about antitrust in the industry. So at the packing house or processor level, and during this crisis, that has really been pushed to the forefront. So what's happening, what is happening with this disconnect between what producers are seeing and what is happening at the grocery store? And so just a couple days ago, a number of different state attorneys general, including our own Tim Fox, wrote this letter to AG William Barr expressing interest in looking into the issue of antitrust in the meat packing industry. So this is something that economists have been trying to tease out for a long time. It hasn't been a lot of conclusive evidence one way or another, but there are a low number of meat packers in the industry, and so it will be very interesting to see what becomes of this. All right, so moving on to some other industries that we didn't cover last time, but that I've been talking to folks about or I've gotten questions about. The first is potatoes. So this has been big in the news here lately, as we've seen some potato giveaways in both Billings and Bozeman, probably other places. And it's pretty striking because just back in December, the situation was very different. There were these stories about a possible French fry shortage, a bad potato harvest last year, and kind of what restaurants were going to do. Of course, that's no longer the issue, and so what we've seen here is seed potato growers in particular losing sales to commercial potato growers. So these are folks that grow the seed that is then used mainly in other states to grow commercial potato production for French fries, for table potatoes, and whatnot. A lot of those contracts have fallen through. So this is a particular hardship for those folks. There was this story on Oregon Public Radio last month talking about the effects. There's this quote, "Cutting farmers' contracts now leaves them holding a bill. Many farmers have already spent $1,200 an acre so far getting ready. They've rented ground, fumigated, fertilized, and in some cases, they've already planted acreage." So that's a stressor on commercial potato producers. On the seed potato producer side, I was just talking with Nina Zydak this morning. She runs the seed potato lab here on campus, and they just put together a survey of seed growers throughout the country. They got about 100 respondents, and about 66% of them had reported some form of lost sales. And just tallying up across those that responded, this is not nationally representative survey. Probably the number is pretty small, but just tallying up across those folks, they had about 16.5 million in lost sales. So big numbers for sure. Post crops, on the other hand, there have been some really nice stories about things like lentils, dry peas, and garbanzos, which we grow a lot of here in Montana, really doing relatively well. So especially during the early days of the pandemic, we saw a lot of people stocking up on dry beans. They're storable, they're relatively cheap, and so there was a lot of drive for them, and we can see that in the pricing of these commodities just from looking at the NAS prices. So increases in garbanzo and lentil prices in particular. What that has meant on the ground, I have heard some stories of sort of supply chain hiccups and difficulties, so I don't think it's great for everyone, but certainly this is an industry, or these are industries that are looking a little bit better relative to some of the other ones we've looked at. Local foods, had a question about this last time, and I think this is a very interesting industry to watch because I think there's a lot of fast innovation going on. So it's really a number of different stories for this industry. So on the good side, if you are an operation that can deliver to people's doors, you're probably in relatively good shape. There's been a lot of interest in home delivery. There's been a lot of interest in CSA subscriptions. NPR had a story on this morning that was also quite good. On the sort of questionable maybe side, I don't know at this point what's going to happen with summer farmers markets. There's been a lot of discussion on how to make them safe. Will people continue to go? We'll see. Farm stands are potentially a place that people can go and you can have a transaction really without another person in some cases, and so that may be a good thing for the industry. But on the bad side, there is this massive decline to complete erasure of restaurant sales and also school demand. So there hasn't been a lot of comprehensive research on this topic, but Don Thilmany at Colorado State and some co-authors have put together some estimates, one of which is that just for that state alone, between March and May, sorry you can't really see that, they are predicting a $6.7 million loss. So big numbers just for that state, just for those months. All right, cannabis, I've had some questions about this. The data for these industries are challenging to get a handle on, but there have been a number of stories about how the cannabis industry is doing during the pandemic. And here in Montana, we have a lot of acreage in industrial hemp. Pulling that apart, or pulling some of the stats on industrial hemp and CBD away from psychoactive cannabis is a little bit of a challenge. But here are a couple of things that we can report on. So there has been a push for increased legalization. The current crisis will probably slow that down significantly. How slow, don't know at this point. We did see a pretty big spike in early sales. Those sales appear to remain strong, according to some reporting that's been done. On the hemp, and particularly the CBD sales side, I wasn't able to pull out anything for the U.S. in particular, but in the U.K. at least, we saw a big growth in sales kind of around the same time as the coronavirus hit. One thing that is also lending to some of the uncertainty in this industry is that there are a lot of differences in state-to-state policy. So what is considered an essential business Are dispensaries allowed to remain open? Here, I think they have been. Other states, that hasn't been the case. But I think for the majority of states, they actually have been allowed to remain open. Lastly, it does look like what people are buying at cannabis shops appears to have changed. So a lot less kind of smokable things and more edible goods. So given that the coronavirus is a respiratory disease, maybe you substitute away from smokables to something else. All right, so that is a quick recap of that industry. Putting all of this stuff together, there's a lot of good information that the Minneapolis Fed has out right now on kind of what's up with the agricultural economy, and in particular, what credit conditions look like. So this is a table comparing Montana with other states in the 9th district. And people in Montana are looking pretty pessimistic here. So this is the percent of respondents who reported decreased levels for the past 3 months compared with the same 3 months last year. And 100% of Montana respondents were reporting decreases in the rate of loan repayments, net farm income, and farm capital spending. 50% reporting decreases in farm household spending. That's probably not good compared, just given that the other categories are at 100%. And then if we look at their expectations for the next 3 months, so those same categories but moving forward, respondents were at 100% expecting decreases in all of those categories for Montana. So higher levels of expected decreases for Montana than pretty much any other area in the 9th district. Not sure what the sample size is for this. It's probably an important thing to look up. All right, but there are some programs that have been designed to help. George was talking about some of those earlier. Another one is the CFAP, the Coronavirus Food Assistance Program. This is $19 billion in CARES Act funding that's made up of $16 billion in assistance to farmers and ranchers. The details are currently pretty lacking. They just had a webinar today sort of encouraging people to get in touch with their FSA office, get the paperwork in line. I guess there are a number of forms that you need to fill out. Some of them are available and others are coming along. But if you are thinking about this, I'd say get in touch sooner rather than later. The other $3 billion is in food box distribution to people who need food, but that will also be purchases of dairy, meat, and produce. So that's additional hopeful help for agricultural producers. Lastly, there is another round of stimulus that there has been a bunch of talk about. However, this is very uncertain at this point. So right now there's a proposal put together by Democrats in the House. It's at $3 trillion. The emphasis in terms of ag portions of that bill is on food assistance, ethanol, which is an industry that really, I think, has been hit super hard and felt pretty left out of the last bill. Livestock, specialty crops, and beginning farmers and ranchers. Also some stuff that's relevant to farming communities and rural areas, such as more checks to individuals, broadband access, and transportation infrastructure. There's supposed to be a vote on Friday, but it's super split, kind of along party lines, and it looks very unlikely to pass at this point. So we will see. And with that, I'll wrap it up. You can get in touch with me at my email address here. Also, check out ageconomt.com, we have a number of articles on this topic now, and I also just took over the Twitter account for AggieCon MT. I don't really know what to do with it yet, but you can reach me there as well. Thanks.
All right, thanks, Kate, and feel free to send questions in through the question and answer pod, everyone. We do have one question so far. What pieces of information should we be watching for to gain some more certainty about the cattle markets in the coming months?
Well, I think the slaughterhouse issue and how we choose to deal with that is going to be very key. So we've had a number of slaughterhouses shut down, and then we've had this, they are now required to stay open. So what happens with that, if that will be very helpful moving forward, not only just from a supply chain logistical standpoint, because we do need to move animals through there, but also kind of what happens within markets. Uncertainty in markets is generally a challenge, and that is a large part of the uncertainty there.
All right, thanks. And we do have one more question here. Where does the sheep and wool industry fall into the new FSA programs that were discussed this morning?
Oh, so this morning, I'm assuming maybe this is the newer program. That would be the CFAP. That I do not know. The text that I've seen is mainly on just livestock, kind of generally, and there are so many uncertainties in this program at this point. I have not seen specific reference to the sheep and wool industry. So I'd say if you are a sheep producer, definitely call up your FSA office. They are operating on a phone appointment basis, but get that information directly from them.
All right, thank you very much. Yeah, and just a side note, we typically buy half a beef at a time, and someone in my wife's family ranches, and they had 3 slots reserved for the summer, and we tried to add a 4th slot for another beef here, and their next availability was January, so I think our local processing capacity is pretty filled up as well. All right, the last speaker today is myself. So I'm actually going to circle back in the very first session 6 weeks ago. We talked about individuals in the stimulus, and we kind of talked about some of the headline programs then, and I wanted to circle back and talk about some of the smaller programs. As I think I mentioned the first time, it is a 900-page bill, the CARES Act is. So there were some headline things that we certainly have heard about already, and you probably have seen in the news. There's also some, I would say, much lesser-known programs, smaller changes that were in there as well. So I'm going to highlight a handful of those, but also note there's a handful of other small changes that you may see as you kind of move forward coming into play in your daily lives as well. So back on April 2nd, we talked about the income tax deadline moving forward July 15th. We talked about the Emergency Family Medical Leave Act, or Medical Leave Program. We talked about emergency paid sick leave. We also talked about the cash rebates of roughly $1,200 for adults and $500 for most children. We talked a little about waivers from required minimum distributions from retirement accounts. We talked to some changes about retirement plan loans and also some unemployment insurance changes. We just touched a little bit on those. So we're not going to cover those today with one exception here. I just wanted to give an update on those stimulus payments. About 130 million payments have been issued, which is really pretty remarkable in terms of how quickly from when that was passed to where we're at today. Nearly all of these were electronic payments up to this point, so they were able to use bank account information that the IRS had collected to send refunds They also were given permission to access Social Security beneficiary information. Most of our seniors do receive their Social Security benefits via direct deposit. So they were able to essentially grab those two databases, and that's where the bulk of these $130 million of payments came from. So in Montana, they've issued just about 434,000 payments of over almost $760 million, and that was as of about a week ago. U.S.-wide, they're estimating somewhere in the range around 150 million payments will be issued through this program, and they've already issued 130 million. Yesterday was a deadline if you did not have bank account information on file from an IRS refund or a Social Security beneficiary. There are folks that either have been paying in every year for their taxes, so it wouldn't be there, or they don't make enough money that they would normally be required to file an income tax return, so they were given the option to provide bank account information. That deadline was yesterday at noon Eastern. So my guess is there will be another round of electronic payments here very shortly. And those will be issued very quickly. And then from that point forward, the IRS thinks they have the capacity to write about 5 million paper checks per week. So they'll start whittling away on the additional maybe, somewhere between 15 and maybe 25 million checks at a maximum of 5 million per week. My guess is they'll be right around that 5 million mark the first few weeks. And then as they get further into the last maybe 5 or 10 million, they're going to be verifying a lot more information. So a lot of the easy checks to issue will be issued first. And then my guess is they'll kind of trickle out throughout the summer for that last component as well. And then also there could be a possibility that some folks will receive a stimulus payment in the spring of 21 from this program here. Not a new program, but if you had made over the maximum income limitation in 2019 or 18, whatever your most recent income tax on file, you would have been estimated to be ineligible for the program, and therefore no check would be issued. However, let's say you made, let's just pick $200,000 last year and you filed your taxes in February of this year, so you're not eligible. Let's say because of the coronavirus thing, your income falls to $50,000 for 2020. That's actually the year in which this program is based. So when you file your tax return for 2020 in the spring of 2021, you would show up as now eligible for the program but have not received a payment because your estimated amount earlier was too high. So that would be a situation where there could be some stimulus payments issued in the spring of 2021 from this program. We also have a question that's come in about will the stimulus money be taxed as ordinary income? And the answer is no. This money specifically was noted as it's not going to be part of your taxable income. It's a good question. That's come up a number of times. All right, so now moving on to some things that we have not covered in the past. So we did have a couple changes, and one of the changes is with flexible spending accounts or flex plans. Sometimes they're called Section 125 accounts. Those are offered through your employer where you can sign up to put in money on a pre-tax basis that then can be utilized for out-of-pocket medical expenses. And then also for some folks that have a healthcare savings account, and that again, if you have a particular kind of health insurance plan, you may also have a healthcare savings account where money goes in on a pre-tax basis and then eligible medical expenses can be taken out. So essentially you're getting to pay your medical, out-of-pocket medical expenses on a pre-tax basis is what both of these two programs do. The definition of eligible expenses has changed, and what has changed is over-the-counter medicines are now allowable again. So 10 or 12 years ago, these were allowable things for like cold medicines, pain reliever, Tylenol, those kind of things. And then you could submit those to your flex plan and get reimbursed. And so those are eligible again. I will be very interested to see what the discussion was around how that got put back into this bill. I know 10 years ago, they were worried that these were very costly to track and there was potential for a lot of fraud around this. Apparently, that conversation has changed, or there was a larger factor on the other side of the argument that now makes these eligible. So those are now eligible again, and that's an immediate change for most plans. So check with your flex plan provider. It is certainly immediate for healthcare savings. So if you went out and bought some cold medicine last week and you still have the receipt, that's something you can submit now to those. They also included menstrual care products. This was to the best of my knowledge, has never been allowable in the past, so those were also added in. I still don't have clarity about what happens with the Montana Medical Care Savings Account. In the past, they have deferred to the federal definition. However, the way this law changed these particular definitions, it actually just removed a line as opposed to changed a definition. So we'll have to see some clarity, but there might be possibility of Montana Medical Care Savings Accounts also making this change moving forward as well. So again, this isn't your big ticket headline news that you saw probably with the $1,200 payments, but it might be a benefit to some folks that are hoping to save a little more on their medical expenses. They also made a change about telehealth services, so they can now be immediately fully covered by your insurance. They are not subject to your normal deductible. This is true even if you have a high deductible health plan. This does not impact the qualification of your plan for the high deductible plan as well. So just a quick small change there, and I actually do know of a couple colleagues that for the first time utilized telehealth services over about 4 weeks ago and actually had a very good experience. So it'll be very interesting to see if long-term telehealth services expand sort of because of this kind of trial run we had here where many people weren't able to go see the doctor like they would have several months ago. There were some provisions in the CARES Act about mortgages. This only applies to mortgages that are federally backed. So most mortgages in the U.S. are federally backed, but not all. But the organizations that you may know of in terms of federally backing those would be, the two big ones would be Freddie Mac and Fannie Mae. Probably many of you remember those names from 10 years ago. They were kind of at the heart of some of the challenges in the last recession, but also things like Veteran Administration loans, the Federal Housing Administration, Housing and Urban Development, and then USDA has some rural loan guarantees as well. That this would apply to all of those loans as well. So any foreclosure actors that were just about to start or were somewhere in the process had a temporary 60-day hold put on place on March 18th. So that'll be expiring here in 4 days from now, where they essentially just put a pause on things until they got a little better handle on what the situation was. If you experience a financial hardship and your loan is federally backed, you can request a 180-day forbearance. So what happens in a forbearance is that no loan payments are required. However, interest continues to accrue on that loan. Okay, so if you had a $100,000 balance, every month they're going to be adding a little bit to it because you're not making any payments, but you're also not going to be reported to credit agencies that you missed payments as well. So you're kind of putting it just on pause in some sense there. After the 180 days, it's also possible you could request an additional 180-day forbearance. And the details on that have not really been worked out. Your mortgage servicer is going to be the folks you need to call and contact to request a forbearance on any of these loans as well. Now, after this forbearance, you'll have to work out a repayment plan with your mortgage servicer. Again, if you just went back and let's say we, skip 6 months of payments right now, and then we start making payments again, if you were to just continue your normally scheduled payments, you're going to be more than 6 payments behind at the end because interest accrued over that 6-month period. So you'll have some options, and again, we don't know what the details of these have looked like because I think they're waiting until we move closer to this 180-day window closing in terms of what the process will be. But you'll probably have an option to work out something like, one, you could make a lump sum payment and bring your loan back to current of where it should have been. Maybe they'll increase your monthly payments. So if you were making $1,000 payments, maybe now you'll make $1,040 for the remaining term of your loan so that when you get to the end of that scheduled period, that loan will be paid off. Or maybe you'll extend payments beyond that. So maybe we skipped 6 payments now, maybe they will add 8 payments to the end to make up for the 6 plus the interest that accrued while you weren't making payments as well. So we don't know the details of what that will look like. And again, only applies to federally backed mortgages. If you have any question about that, just contact your lender, and they can explain the details and tell you whether your specific loan is eligible. Federal student loans also were impacted by the CARES Act as well. So what they did with federal student loans is they said the interest rate from March 13th, notice a slightly different date than the last one, will be through September 30th, so a little bit over 6 months, is going to be 0%. Payments can be deferred until that September 30th date has passed if you would like to. You don't have to have them deferred, so you can continue to make payments. You don't have to take any action on the borrower part, and this includes direct loans, federal family education loans, health education assistance loans, and federal Perkins loans. Now, the last three of those, I've got an asterisk there. There are some situations where your institution or the state may actually own those loans, and then this program would not directly apply. So this is different from the mortgage pause, though, because interest is not accruing while that September 30th period runs. Now, there's also some loan forgiveness programs that are out there that have been out there. Most of them were started sort of in the tail end of the George Bush administration, where if people make on-time payments based on a percentage of their income for 10 years or 120 payments, any remaining balance at the end of that would be forgiven. So what happens if you take this 6-month pause of forbearance was kind of the question. Because there were a number of folks that maybe they're 8 years in and certainly didn't want to take a 6-month pause to then make them start over on 120 payments to get back to there. So this 6-month forbearance provided by the CARES Act will still count towards your successful completion of payments. In fact, the way it looks like it's written, even though let's say you had made 110 payments and then you pause for 6 payments and you don't make them because of the CARES Act and you start back up, you'll actually only have 4 remaining payments. So they're going to count these 6 months. Not only is it a pause for you, it actually counts as if those 6 payments had been made towards your total of 120 payments as well. There are private student loans out there as well, so this does not have a direct impact on those private loans. Like I mentioned, a couple of those loan programs, depending on the time they were issued, some states own some and some institutions own some. And then many just lenders themselves have some student loan programs as well. The CARES Act did not directly impact any of those. There are some private student loan lenders that are offering deferred payments or reduced payments, or they're waiving fees and penalties to make changes to your payment plan as well. But you just need to check with your lender because those are going to vary institution to institution. It's not directly laid out by the CARES Act. Charitable contributions. The CARES Act allows for a $300 above-the-line deduction for charitable contributions for 2020 for individuals. So many folks do not itemize anymore, specifically after the standard deduction went up 14 months ago or whenever that tax change was. So this would allow you to make a $300 contribution and have it reduce your tax burden for the 2020 year. So this is something that will come into play in the spring of 2021, assuming you made a contribution during 2020. There are some restrictions on donor-advised funds and private foundations as well. So just a small detail there, and you may be able to reduce your income by $300 there as well. It also removed the maximum charitable deduction amount for 2020. And also, a note on that previous one, it is a 1-year program is how my understanding there. Now, in the past, individuals were capped at being able to deduct more than 60% of their adjusted gross income. So if someone made $100,000, the most they could deduct off their contribution or their income for charitable deductions would have been $60,000. Which again is quite a lot relative to their income, but that cap has been removed for 2020. Corporations were capped at 10% of their income. For this 1 year, it's a 25% cap. So if that corporation had $1 million of income, previously $100,000 was the most they could have deducted for charitable contributions. Now it would be $250,000. So they've raised that for 1 year. All right, with that, are there any questions? Well, folks are thinking of questions. Let me ask folks to fill out a couple of evaluation forms. And any comments you want to share to us about today's or this entire series that we've got here. And also you'll see poll C. We have been discussing the idea of offering a similar series in the fall. At that point, we'll probably have a lot more analysis in terms of how many jobs were lost, what industries, how long the ag markets were low, what they look like now, some things like that. So we're certainly considering that, but we did want to see if that's something that you all might be interested in attending. And I will switch back to the other screen in a minute for questions that want to come in as well. And we will put a recording of today's session on our website, along with all the other recordings, and those will remain there. So if you want to share them with someone or look back and review one of the other sessions, those will be there for you to access. So let me now switch back to our other screen here. You're also welcome to send a direct email to me if you've got some more questions later that you think of as well. All right. Well, not seeing any additional questions here today. Thank you all for joining us, and thank you to George and Kate for presenting. We do have one more question that's come in, so let me go ahead and ask that. If the charity is 100%, does that mean the same thing for itemizing? I'm not sure I 100% understand the question, but this would mean that you do not have to itemize, but you would be able to deduct $300, kind of in the same way as if you had been itemizing. So it will allow you to reduce your income by that much and still take that standard deduction. Now, I think if you're itemizing anyways, this is something you could just add to your normal itemization, so I don't believe it would impact. I think it would be the same either way, whether you did the $300 at the top or whether you put it into your itemizing list as well. If that's not the question, please let me know. All right, it looks like I got close on what that question was. So, all right, not seeing any additional questions. Thank you all for joining us. I hope you have a great day, and watch for some information. We'll try to reach out probably in the fall. Maybe we'll start this series back up again.